Welcome back to JRNY TV. Whether you've been hearing about Bitcoin, Ethereum, or the mysterious world of cryptocurrencies, today's episode is for you. We're diving into the basics of crypto to answer one simple but very important question. What exactly is cryptocurrency? If you've ever wondered how this digital phenomenon works, why it is so talked about, or why it's reshaping finance as we know it, you are in the right place. Let's break it all down one step at a time so you can walk away with a crystal clear understanding of the future of money. What is cryptocurrency? Let's start with the basics. At its core, cryptocurrency, or crypto for short, is a digital or virtual form of money. And unlike any other traditional currencies, like the dollar or the euro, crypto doesn't have a physical form. It only exists purely online. And what makes it unique? By cryptography, which means transactions are encrypted, reducing the risk of fraud. But here's where it gets interesting. Cryptocurrencies operate on decentralized networks, meaning there is no central authority or government or a bank controlling them. Instead, they're actually powered by blockchain technology. Think of a blockchain as a digital ledger that records every single transaction across the entire network of computers. And this ledger is so transparent, tamper-proof, and accessible to anyone, which is a key reason why crypto is often called the people's money. The first cryptocurrency, Bitcoin, was launched in 2009 by an anonymous creator or group using the pseudonym Satoshi Nakamoto. Bitcoin introduced the world to the concept of peer-to-peer electronic cash, enabling individuals to send and receive money without needing intermediaries. Since then, thousands of cryptocurrencies have emerged, each with a unique feature and purpose, from Ethereum's smart contracts to Dogecoin's lighthearted meme-inspired approach. What sets cryptocurrency apart from all traditional money isn't just its digital nature, but its promise of greater financial freedom and innovation. By removing the intermediaries, crypto empowers individuals to take control of their finances in a way that was not possible before. And as we all see, that's just the beginning of what makes crypto so revolutionary. Why is cryptocurrency so important? Why does cryptocurrency matter? And why should we care? For starters, cryptocurrency represents a fundamental shift in how we think about money, value, and the global financial system. For starters, it offers a level of financial inclusion that traditional banking simply can't match. Over 1 billion people around the world do not have access to banks. But with cryptocurrency, all you need is an internet connection to send, receive, and store funds securely. This accessibility has the potential to empower people in underbanked or unbanked regions, leveling the playing field in ways we've never seen before. Another critical aspect in decentralization: traditional financial systems. They rely on centralized entities like governments, banks, or payment processors to manage and authorize transactions. And while this structure works, it also comes with risks, such as censorship, corruption, and inefficiencies. Cryptocurrencies eliminate the need for these intermediaries, allowing users to transact directly with one another. This peer-to-peer not only reduces the cost, but also ensures that control of money remains in the hands of the individuals rather than the centralized authorities. Cryptocurrency also introduces transparency and security on an unprecedented scale. Because transactions are recorded on a public blockchain, they can be audited by anyone, reducing the risk of fraud or hidden activities. And at the same time, advanced cryptography ensures that the user identities and funds remain protected. This combination of openness and privacy is unique and has applications far beyond simple transactions. Finally, cryptocurrency is laying the foundation for a new digital economy. Blockchain technology enables innovations like decentralized finance, DeFi, which also allows users to lend, borrow, and earn interest without banks, and non-fungible tokens, formerly known as NFTs, which are revolutionizing ownership in art, gaming, and entertainment. As we move forward into the Web3 era, cryptocurrency is poised to be a cornerstone of this new digital world, connecting technology and finance in ways we're only beginning to understand. Now, let's address one of the most common questions anyone new to crypto. Is cryptocurrency safe? The short answer is that the technology itself, blockchain and cryptography, is highly secure. However, the ecosystem surrounding cryptocurrency can present risks, specifically for those who are a little unfamiliar with how it actually works. Understanding these risks and how to protect yourself is key to navigating this space with confidence. First, let's talk about security. Blockchain technology is designed to be tamper-proof, with transactions recorded on an immutable ledger verified by a decentralized network. Cryptographic techniques ensure that your funds and data remain private and secure. As long as you have control of your private keys, The unique digital credentials that give you access to your funds, your cryptocurrency is effectively untouchable. That said, if you lose your private keys, you lose access to your funds. One more time, if you lose your private keys, you unfortunately lose access to your funds. So managing them carefully is critical. That brings us to the risks. Now, while blockchains themselves are incredibly secure, the platforms and the tools that we use to interact with crypto, exchanges, wallets, and apps can sometimes be vulnerable. Scams and phishing attacks are all too common in the crypto world. For example, an exchange might be compromised, or someone might try to trick you into revealing your private keys. The best defense against these threats is education. Use reputable exchanges. Enable two-factor authentication. And please consider using hardware wallets for long-term storage of your funds. It's also worth noting that crypto's price volatility and a risk. Prices can swing dramatically in short periods, which can be thrilling for traders but stressful for long-term holders. For beginners, it's important to only invest what you can afford to lose and to diversify your portfolio to reduce the risk. While cryptocurrency is inherently secure, navigating its ecosystem requires caution and preparation. With the right tools and the knowledge, you can enjoy the benefits of crypto while minimizing its risks. Not all cryptocurrencies are created equal, and understanding the different types can help you navigate through the crypto space a lot more effectively, in fact. Let's start with Bitcoin, the original cryptocurrency and often referred to as digital gold. Bitcoin's primary use is as a store of value and a decentralized alternative to traditional currencies. With its limited supply of 21 million coins, Bitcoin has become a very popular choice for those looking to hedge against inflation or diversify their investment portfolios. Next up, we have Ethereum, which introduces the world to smart contracts. And unlike Bitcoin, Ethereum is not just a currency. It's a platform for building decentralized applications. Developers can create everything from decentralized finance protocols to NFT marketplaces on Ethereum's blockchain, making it one of the most versatile and widely used cryptocurrencies in the world. Other smart contract platforms like Solana, Cardano, and Polkadot are competing in this space, offering faster transactions and lower fees. Then there are stablecoins like USDT, Tether, USDC, and DAI. These coins are pegged to the value of traditional currencies like the US dollar, offering the stability of fiat money with the convenience of crypto. Stablecoins are ideal for day-to-day transactions, transferring money across borders, or parking funds during volatile market conditions. Finally, let's not forget meme coins like Dogecoin and Shiba Inu, which started as jokes, but have gained massive communities and real-world utility. And then there are utility tokens like Binance Coin, BNB, or Chainlink, Link, which powers specific platforms or services. BNB, for example, offers reduced trading fees on the Binance exchange and access to various features within its ecosystem. The diversity of cryptocurrencies highlights the innovation happening in this space alone. The diversity of cryptocurrencies highlights the innovation happening in this space. Whether you're looking for a store of value or a tool for development, or maybe just a bit of fun, there is a cryptocurrency out there for everyone. Let's dive into how crypto transactions actually work. It's simpler than it might seem, but there's a lot happening behind the scenes. So when you send cryptocurrency, you're actually initiating a request to move funds from the wallet you own to someone else's. This request gets broadcasted to the blockchain network where nodes or computers on the entire network validate and process the transaction. Take Bitcoin, for example. When you send Bitcoin, your transaction is then bundled with others into a block. Miners in the network then compete to solve a complex mathematical puzzle to validate that block, a process known as proof of work. Once the puzzle is solved, the block is added to the blockchain, and your transaction is then confirmed. This process ensures the integrity of the network, making it nearly impossible for bad actors to tamper with transactional data. What's unique about crypto transactions is that they don't require intermediaries like banks or payment processors, and instead, they actually rely on cryptographic keys, one public and one private. The public key is like your wallet address, which you can share to receive funds. You can think of this as your email address or public username. The private key is your digital signature, used to authorize transactions, which you can think of as your password. It is crucial to keep your private key secure because anyone with access to it can control your funds. Crypto transactions are also transparent, but yet private. While anyone can view transaction details on the blockchain, of course, like wallet addresses and amounts, the identities behind the wallets remain anonymous. The combination of transparency and privacy is one of the many reasons why crypto is so revolutionary. It allows for trustless transactions, enabling people across the globe to exchange value securely and efficiently, often at a fraction of the cost of traditional methods. Okay, all right, now that we understand how cryptocurrency actually works, let's take a step back and explore where it all began. The history of cryptocurrency is as fascinating as the technology itself, filled with innovation, mystery, and disruption. The story starts in 2009 with the creation of Bitcoin, the first cryptocurrency by an anonymous figure or group known as Satoshi Nakamoto. Bitcoin was revolutionary because it introduced blockchain technology and solved the long-standing problem of double spending in digital payments. This breakthrough allowed value to be transferred securely without the need for a trusted third party like a bank. Bitcoin's initial use case was simple, a peer-to-peer, but over time, it has evolved into a store of value, often referred to as digital gold. While Bitcoin laid the foundation, the crypto landscape truly expanded in 2015 with the launch of Ethereum. Created by Vitalik Buterin, Ethereum introduced the concept of smart contracts, programmable agreements that execute automatically when predefined conditions have been met. This innovation allowed developers to build decentralized applications, known as dApps, and opened the door to entirely new industries, such as decentralized finance and NFTs. Since then, thousands of cryptocurrencies have emerged, each building on the ideas introduced by Bitcoin and Ethereum. From privacy-focused coins like Monero to high-speed transaction platforms like Solana, the ecosystem has grown into a diverse and dynamic space. Today, cryptocurrency is not just a niche interest, it's a global movement, transforming industries and challenging traditional systems of finance and governance. The history of crypto is still being written, and we're all a part of its next chapter. One topic that often comes up when discussing cryptocurrency is environmental impact. While blockchain technology has revolutionized finance and technology, it's not without challenges, especially when it comes to energy consumption. Cryptocurrencies like Bitcoin operate using a consensus mechanism called POW, formerly known as proof of work, where miners solve complex mathematical puzzles to validate transactions. This process is energy intensive, and at its peak, Bitcoin mining alone was estimated to consume as much electricity as some small countries. So the environmental concerns surrounding Bitcoin and similar POW-based cryptocurrencies have led to significant criticism. Mining operations often require high-powered hardware and vast amounts of electricity, with some regions relying on non-renewable energy sources. However, the crypto industry is adapting. Many mining farms are transitioning to renewable energy, with some even setting up operations near hydroelectric or solar power plants to minimize their carbon footprint. On the other hand, newer blockchains have been addressing energy efficiencies from the ground up. For instance, Ethereum's transition from POW to proof of stake in 2022 reduced its energy consumption by over 99%, setting a new standard for sustainability in the crypto space. Other projects like Solana and Cardano also use energy efficient consensus mechanisms, showing innovation can in fact align with environmental responsibility. While the environmental impact of cryptocurrency remains a valid concern, it is very important to recognize the progress that is being made. The shift toward greener technologies in renewable energy adoption and mining is a positive step forward. As the industry continues to evolve, balancing innovation with sustainability will be a key to ensuring that crypto remains a viable and ethical part of the future. What exactly is the future of cryptocurrency? The future of cryptocurrency, for starters, is exciting and unpredictable. What started as a niche experiment with Bitcoin has grown into a global financial system that is challenging traditional banking, governance, and even the way we define ownership. But where is this all heading? One key trend is the growing adoption of blockchain technology across industries. Cryptocurrencies like Ethereum have already proven that blockchain can easily power more than just money. Decentralized finance is poised to revolutionize banking as we know it by eliminating intermediaries and giving individuals greater control over their financial activities. NFTs, they are reshaping art, gaming, and entertainment, creating new markets for digital ownership. As blockchain infrastructure improves, we are very likely to see even more innovative use cases emerge, from supply chain management to healthcare and beyond. Regulation will also play a very strong part in defining a role for the future of cryptocurrency. As governments around the world grapple with how to manage this rapidly growing sector, we can expect more clear and structured rules. Striking the right balance between oversight and innovation will be critical in determining how far crypto can go. Ultimately, the future of cryptocurrency will depend on how it adapts to challenges like scalability and environmental impact, as well as public trust. As technology's layer 2 solutions and energy efficient blockchains mature, the barriers to mass adoption will continue to shrink. Whether you see crypto as a transformative force or remain skeptical, one thing is inevitably clear. Cryptocurrency is here to stay, and it is shaping the future of finance, technology, and beyond. How can you get started with cryptocurrency? Now that we've covered what cryptocurrency actually is, how it works, and why it's important, let's talk about how you can get started. The first step is choosing a cryptocurrency exchange, a platform where you can buy, sell, and trade crypto. Popular exchanges like Coinbase, Binance, and Kraken are great starting points for beginners. These platforms are designed to be much more user-friendly and often include features like tutorials and easy access to popular coins like Bitcoin and Ethereum. Once you've chosen an exchange, you will need to create an account and verify your identity. This process, often called KYC, Know Your Customer, is standard for most reputable exchanges and ensures compliance with regulations. After that, you can deposit your funds using a bank transfer, a debit card, or even PayPal, depending on the platform you're using. Once your account is funded, you can start by buying cryptocurrency. Beginners often stick to well-established coins like Bitcoin or Ethereum, but as you gain confidence, you might want to explore other coins with specific use cases or community appeal. Now that you've got your crypto, the next step is securing it in a wallet. While exchanges often provide built-in wallets for your convenience, it's best to transfer your funds to a private wallet for added security. One more time, it is best to transfer your funds to a private wallet for an additional layer of security. There are two main types of wallets: hot wallets and cold wallets. Hot wallets, like mobile apps or desktop software, are connected to the internet and convenient for frequent transactions. Cold wallets, like hardware wallets or paper wallets, store your private keys offline and are ideal for long-term storage. Finally, take the time to learn about the projects that you are investing in. Research the team, the technology, and the community behind each cryptocurrency. Remember, cryptocurrency is as much about understanding innovation as it is about investing. Start small, diversify your portfolio, and most importantly, only invest what you can afford to lose. By following these steps, you'll set yourself up for a smoother journey into the exciting world of cryptocurrency. And that is a wrap for our deep dive into cryptocurrency. From understanding its basics and history to exploring its use cases, challenges, and future potential, crypto is far more than just digital money. It's a global revolution in how we think about finance and technology. As we've seen, crypto offers opportunities for financial inclusion, innovation, and decentralization, but it also comes with risks and challenges that require careful consideration. So whether you're intrigued by Bitcoin's role as digital gold, fascinated by Ethereum's smart contract capabilities, or you're just excited about new frontiers like NFTs and DeFi, there's a place for everyone in the crypto space. What's your take on cryptocurrency? Are you ready to dive in, or are you still on the fence? Let us know in the comments below, and we would love to hear your thoughts. As always, don't forget to like, subscribe, and hit that notification bell to stay informed on all things crypto. Thanks for watching JRNY TV.